This is our video Forex blog for December 29th. One of the things I look at before I even start to trade is our FX total view, which gives you a wealth of information. Today we know the New Zealand yen and New Zealand dollar were up 4 days in a row, which means if the market goes up today and runs out of steam at our upper containment bands, we want to sell those, especially if the FX trend intensity loses steam, like I just said. The CAD yen as well. The dollar CAD and dollar yen have been down 6 and 7 days, and if they go down to the lower containment bands, fib targets, or any major support area and run out of steam there, you want to look for buys because you can oftentimes get violent moves up. The dollar CAD was a perfect example of that, and our tools allowed you to buy the low and catch that explosive move up. Here in the euro dollar, the trend was down last night, and it came up today and hit our projected fib level along with a trend reversal signal, and notice that there wasn't a whole lot of strength, so pretty safe trade. The market only pulled back about 30 pips or so, and you can see it just wasn't willing to go down. And once markets go sideways long enough, 2-3 hours after showing you that they double bottom with almost no weakness, this trend could reverse. The weekly trend shifted up here, and you might have bought this breakout, and when it went up to the upper containment band, ran out of steam, you may have got out of the trade. Notice the intensity of that up move. This is our trend explosion system. It had pulled back, went sideways. You buy the breakout right here around 86 with your stop right underneath the low. Draw your fib off this previous swing, and that gives you an idea where your profit target is. You're risking 5 to 12 pips with a pretty good chance of making about 50. In this case, it went about 65 pips your way. Now once it goes above the upper containment band, it becomes more and more risky to buy pullbacks, but if you bought this pullback, that went up about 20 pips, and you can also see that we double topped up here with half the strength, and so this is a good place to start looking for counter trend trades. Pound dollar was underneath the 200-day moving average all day. The longer term trend's down. You might have gone short here and had a small trade here and here. And again, just like the euro dollar, wasn't willing to go down. There was no real weakness, and once the market went up with explosive strength like this, you're looking to buy pullbacks. And you might have bought this first pullback here and got stopped out and got in on the second one, and that one took off and went right up to our projected fib max high and stalled out for the day. And you can see it hit that level with less strength than it had earlier, but that was a phenomenal 75 pip move. Dollar Swiss, the daily, weekly, monthly trends down, so we had a narrow range breakout to the downside right here. Notice the previous week's lows right underneath it. You want to avoid trades where the likely support resistance area is less than 1.5 times your risk. So in other words, if you're risking 10 or 12 or 15 pips, you need a profit target that's 15 to 25 pips away. This is too close, and that's one of the reasons why that trade failed. So if you did take that trade, be aware that there's major support here, and if the market can't get underneath it, you get out with a few measly pips. And once it went back above the hourly here, this is anytime you have a failed breakout, usually that trade works. This one only went up 15 pips because the longer term trend was down. Because the longer term trend was down, however much you made on this trade here, when it double topped here with half the strength it had before, and it wasn't even that strong before, the longer term trend's down. Great place to look for counter trend trades. If you miss that trade, the market's kind of chopping around here. Once the hourly's broken, the first time it touches and it can't get above is a good place to go short. That didn't lead to more than about 5 or 6 pips. But once it broke down and made a lower low here, you might have gotten short. You would have got stopped out with that trade, got back in again the second time, and then the price fell 40 pips. This is the dollar CAD trade I was telling you about earlier. We know that the dollar CAD was down 7 days in a row. That's very significant. So when it came down today and hit the previous month's low without that much weakness, good place to look to get in. And we have a nice 1, 2, 3 low right here. Market went sideways, you buy the breakout. You might have done the same thing right here. You would have got stopped out with the first trade. The second trade just absolutely exploded up about 60 pips. And guess where it went? Right to our fib level that you knew the day before. And also it went to our trading zone projected max high the day, and the market pulled back. Because the longer term trend was so weak, you might have sold this down to the hourly, and our software also predicted the low here. Australian dollar, the daily, weekly, monthly trend's up, so when it went back above the hourly right here, great places to look to get in. Notice there's not a whole lot of momentum, so you might not have bought that pullback there, but that trade worked. This is kind of an example of our Elliott two-wave pullback system. You draw your fibs on the first wave down. Notice it hit the fib targets, and the hourly happened to be there too. A lot of times when trends start, the first time it touches the hourly, the market usually continues that trend. And both of those systems, when added together, found this beautiful 60-70 pip move. Now keep in mind that it went up without that much momentum, so if you got into these trades, most of us probably would have got out here. When it broke above the previous day's high, you got in right here at 57, and it went up about 15 pips. New Zealand dollar, this is one that's been up 5 days in a row. So earlier today you're looking to sell this here, and it didn't really pull back that much. You might have made 5 or 6 pips, and then you sell the double top without that much weakness, and eventually that pulls back. One of our rules is don't short or buy support resistance area the third time it touches, because if an area hits and it sells off and hits again and it sells off, the third time there's nobody left to sell there, because obviously the market's not going down. The longer term trend on this thing is up. We already know it's been up 5 days in a row. So once it breaks above this area here, you might have got in with the second fib level up here as your likely profit target. I wouldn't have taken any of the other pullback trades on the way up because it wasn't that strong earlier, and because it's been up 5 days in a row. But it just kept continuing up today. You can't take trades that are not safe enough. That was just too risky looking for buys up here, given the fact that it was up 5 days in a row. New Zealand yen also, it's been up 5 days in a row, so when it hits the upper containment band without that much weakness, you might have got short here and here. And then the market went up again, and it hit the fib target of this previous swing. Notice the 1.618 fib target. It's strong, but not obscenely strong, and that trade led to a nice little 15-20 pip pullback. It really didn't have that much strength. You might have bought the pullback here to the hourly. You can see the previous one did. Euro yen daily, weekly, monthly trends down. It's underneath the hourly. You might have gone short right here. It didn't really lead to much. And again, when it came back to the hourly and couldn't go above it, you might have gone short here, pull back 20 pips. And once it's above the hourly, it's really too weak to buy, and there's no intense momentum to the upside. You typically want to avoid when currencies go sideways like this. If it went below this level here later today or tonight, you could sell that. If it does break out to the upside, it does have decent room to go all the way up here till 36 will be the next profit target, which is about 25, 30 plus pips away. Dollar yen also has been down 7 days in a row plus. So when it hit this earlier today, you might have looked to buy here. Didn't generate that much of a move. 15, 20 pips up. Pull back again not that weak. And once an area gets hit the third time, I wouldn't buy it, even though that trade worked. Eventually it broke down underneath there. And these fib levels, once broken, tends to cause stops to get hit that are underneath it, and that's what led to the further move down later in the day. If the market goes sideways there long enough, because it's been down 7 days in a row, if you were trading this right now, you might buy a breakout of 781.7 here. Australian yen, just extremely choppy. Anytime you see this, it's just best to avoid it. Very few people would have made money on that, and if they did, it probably would have been luck. Pound yen, daily, weekly, monthly trends down. It was above the hourly earlier. Hit this major resistance areas up here. Once it breaks down underneath the hourly and underneath our narrow range breakout pattern, it's a good place to go short. You might have got stopped out here. If you did, you had to go back in again here. Market pulled back about 30 pips. There really wasn't that much momentum on the way down, so the previous day's low acted as support. You might have looked to sell here when it hit the hourly, but it shot through there. Then on the way down, if you're looking to buy that, it broke down underneath the hourly again. So anytime currencies go above and below the hourly, there's really no clear direction. The longer term trend's down, so if you spot a double top up here later without that much strength, that's a pretty safe trade, but it really took hours to really move about 20 pips. CAD yen, this one's also been up 3 days in a row, so it's likely to go down. It was kind of hovering around here at the 10-day moving average, and when it finally broke underneath there, pretty decent place to go short. This is your profit target. It shot way below there. Anytime it goes below the fib level, look at the lower containment band as a likely place to get out. And because of the extreme weakness, you wanted to sell the next pullback up. You go short right here, and that pulled back about 10-15 pips. The weekly trend's extremely weak, so when it comes back up again, kind of forms a double top, not quite, with about 40% less strength than before. You might have gone short again here. I probably would have got out of the trade right here and missed the remaining 20 pips.